This is Caesar Bryan. I am the portfolio manager of the Gabelli Gold Fund, and I'd just like to talk a little bit about gold and gold equities today. Gold price finished November at 2035, which is up about 12% year to date. And this despite higher yields, both at the long and short end, higher real rates as inflation has come down, and a stronger dollar. So why has this happened? We think it's due to the fact that central banks have been active and strong buyers of gold. In 2022, central banks purchased, according to the World Gold Council, over 1,100 tons. And year to date, through the end of September, central banks purchased a further 800 tons. This at a time when investors, private investors, were shedding ounces. If you look at the ounces in the gold ETFs, they've declined steadily throughout the year. So looking ahead, we think that should the tightening cycle be over and there are signs of a slowing economy, obviously inflation's come down, if central banks begin to ease policy, the gold price should rise further. In previous easing cycles, gold has performed very well, and indeed private investors then may come back into the gold ETFs. It's worth pointing out that on a technical basis, gold is finely poised. So since 2020, gold has traded through $2,000 an ounce on 4 occasions. Now the high was back in 2020 at $20.75. We're very near that level, and should the price go through that to a new high, then we think there's chances are that gold will continue to perform well. Now, we're fundamental bottoms-up equity investors. Gold equities, we believe, have various advantages for investors relative to gold, the most obvious being the natural leverage to movements in the gold price that equities provide. But also you can, with an equity, gold equity, you can get growth. You're buying gold in the ground at a big discount. And lastly, and importantly, gold equities provide investors with income. So an example is Newmont. Stock price is about 40. They pay a 40-cent quarterly dividend, which is a total return or a distribution of 4%. Finally, gold equities are trading at historic low valuations relative to gold, which provides, in our belief, an opportunity. If gold stays at this level or goes higher, we think gold stocks should perform well, as they have lagged significantly so far this year. Thank you.